They never taught us this in school. And for generations, we've been playing a financial game we never even knew we were in, let alone how to win, because we were never taught the rules. But today, we changed that. Today, I'm going to introduce you to a wealth building strategy most folks never hear about until it's too late. It's called LIRP, which stands for Life Insurance Retirement Plan. And when you understand how this works, you'll never look at money, retirement, or your legacy the same ever again.
Let's get this money. Euros, dollar bills, get it next on Let's get this money. 1 yen, better know I'm on it.
What's cracking, everybody? My name's Smart Guy Matt Sapaula here, hailing to you from Dallas, Texas. And I've written a couple best-selling books called Faith Made Millionaire and Gotcha. And I reference this LIRP strategy quite a lot. Now, many of you may not know this, but I don't have a college degree. I had a 2.2 GPA in high school. I served 8 years in the Marines. And the way I learned about money was the hard way. How many guys learn the hard way too as well? Like, you learn about money after a lot of mistakes versus learning from wisdom. Well, that was me. I was born and raised in Chicago. Our family immigrated here from the Philippines. And the only time I learned about money was when I made a mistake with it. And so if I can talk to my people right quick in the black and brown multicultural demographics, because this just isn't about money. This is about freedom. And you're looking at the generational chains that a lot of us have had to break and overpower. We got to continue to break those because, in my opinion, money is more than just where you put your money, what you save it, where you invest it, what insurance you get, what real estate you purchase. It's a mindset and a mentality that for us, it's the first time we've ever seen certain things. And just because you've never heard of certain things, not because you've never seen certain things, doesn't mean it doesn't exist. I mean, when's the last time you've seen your brain? You know, it's there though, right? And so the same thing happens too with some financial strategy where a lot of people say it's too good to be true. Well, just because you've never heard of it or it's too good to be true doesn't mean it actually doesn't exist. Because in my study of wealthy people, my whole entire career, because I wanted to study people that are living a financial life, at least a financial life that I wanted to live. And guess what I figured out about rich people? They got a lot of life insurance. And the way they use life insurance, because if I say the word life insurance, many of you say what? The life experience I think about when I hear the word life insurance is about death. Well, guess what I learned about rich people and wealthy people? They use life insurance when they're alive. And so what I wanted to do is educate myself and create the awareness and education. So therefore I can filter that same information to the people I love and care about in the community I love and care about. I wrote a whole book about it called Gotcha, and my favorite client is in there. And when I met her, she had multiple 401ks and finally put into one consolidated IRA, individual retirement account, which we later converted to a Roth IRA. And going forward, since she didn't have a retirement plan that had any company matching, we decided to fund a LIRP, a life insurance retirement plan. In addition to that, we also planned for long-term care because down the road, guess what? A lot of people don't realize that they need another $100,000, $200,000, $300,000 just tucked away for home health care and just healthcare in general when they are retired. See, most people think that when they retire, that they're going to live on less money because they're not as active, they're not going out as much, they're not spending as much. That's a myth. Most people you'll ever talk to in retirement are spending more money in retirement than they ever had when they were working. And so today she's spending about $6,000, $7,000 a month in, her and her husband are spending $6,000 to $7,000 a month in a retirement community that have 8 activities to do every day, happy hour by 4:30 p.m. It's not a retirement home, it's a retirement community. Activities, fun, excitement to honor and live out the best golden years of her life. Food is taken care of, cleaning is taken care of. The only thing that she's got to do is laundry. But that costs money. But thank goodness, with the strategy, we were able to plan for some things like that. The reason why I talk about this favorite client of mine, and every time she withdraws that money from her retirement because she doesn't pay a dime in tax, because it's a tax advantage strategy. The reason I talk about this favorite client of mine is because this client is my mother. And so oftentimes people get involved in financial services and pitch savings, investments, insurance, et cetera, and they never have an actual practical experience. You're talking to a guy that's had practical experience with his mother. We have a saying in financial services that says, don't ever put your client's money into something that you wouldn't trust your own mother's money in. That's why we never got involved in .coms in the early 2000s. We never got involved in Bitcoin and NFTs because there was risk money that have never be safe and comfortable knowing that my mother's money is in there, knowing that it's exposed to risk. We're not going to have that problem here with a life insurance retirement plan. But think about this. In 2022, the median net worth of white families was over $284,000. Black families, just $44,000. Latino families, just $62,000. That's not just a gap, that's a chasm. And it's not just happening at retirement. Because when we look at retirement savings, Black households have less than half what white households have. Latino households, only 23%. What white households have are saving for the future. So let's be clear. Traditional retirement plans are not working the same for us. And the worst part, we've been told that's our only option. Every financial guru that you're going to find online, and there's a lot of them, are going to tell you Roth IRAs and traditional IRAs and term insurance and save the difference. That's the only strategy out there available. I'll tell you this, being involved now in financial services for 26 years now, there's so many different options. And by the way, this LIRP may not be an option for you, but if somebody puts you on this conversation and share with you this video, is to educate you on something that for a lot of people, they've been able to take advantage of. Let's get into it. LIRP stands for Life Insurance Retirement Plan. Now, don't get it twisted. This isn't your grandma's burial insurance. This isn't the stuff you get in your mail from your credit union asking you to buy accidental life insurance. This ain't it. This is a tax-advantaged wealth-building vehicle that grows cash while protecting your family at the same time. So here's how it works. You take a permanent life insurance policy. Some people use whole life, some people use universal life, some people use index universal life. I particularly use a lot of index universal life policies for myself, my wife, my children. And unlike funding it at minimum or target premium, I overfund it. In the technical terms is up to the 7702 level or up to the 7-pay guideline of the life insurance policy. So you're overfunding the policy. And people think, why is your life insurance policy so expensive? No, the premium is split up at the life insurance company. A small portion goes towards the cost of insurance, which it does fees and expenses, but the lion's share goes to building equity or building cash value inside your life insurance policy. That means you pay more than the minimum premium. So now the cash value, it grows tax advantaged over time, meaning Uncle Sam isn't touching it while it grows. Similar to many of you experiencing in your traditional 401k plans or your IRAs, individual retirement accounts. And here's the cool part. You can access this cash and borrow from it in retirement. And by the way, you dictate when that retirement is. And this is perfect for those of you in the FIRE movement, financial independence, retire early. For those in the FIRE movement, because you don't have to wait until you're 59 and a half years old to use this money in retirement. You can use that, if you retire early, you can use that 35, you can use that 45, you can use that 50, based on how much cash value accumulation is growing in the policy further and away from what they call the early surrender charges of the policy. And guess who does this? The wealthy does this. Let me say that again. You can take the money out that you put in without paying a dime in tax, just like the wealthy do. You don't pay any tax on it when you withdraw this money at any time ever, assuming it's in accordance with 7702 and it doesn't violate any modified endowment contract guidelines, which are very simple guidelines to meet. You're not penalized for pulling out money like a 401k. You don't have to take a forced withdrawal required minimum distribution at 73. You are in control, not the IRS. By the way, I just interviewed Douglas Andrew here a few weeks ago. I want you to watch this video here on why he even doesn't own a Roth IRA. Check this video out right here. So some of you are asking, is this legal, Matt? Is this legal? Are you for sure? Yes. Look up Internal Revenue Code 7702. Thanks to Section 7702 of the IRS Code, this section defines how life insurance policies get their favored tax treatment. If your policy meets the guidelines of Section 7702 and it's set up properly, the cash value grows tax-free, can be accessed tax-free, and sadly, when you do pass away, it blossoms and increases in value to your family members, income tax-free too as well. Roth IRAs can't do that. Traditional IRAs can't do that. Traditional 401ks can't do that. Now, here's the key though. You have to stay within certain limits. If you overfund the policy, you put too much cash in the policy, violating Section 7702 guidelines, creating what they call a modified endowment contract, then you lose those tax-advantaged benefits, meaning that now you have to pay taxes, income taxes, on the gains of the policy as ordinary income. This is why working with a properly trained, licensed insurance agent, not financial advisor, because financial advisors sell stocks, bonds, and mutual funds, and variable annuities and variable universal life. Properly trained life insurance agents who understand these strategies and understand the details of the strategies can help you structure these policies the right way. If they understand 7702 guidelines, they understand what the 7-pay guidelines mean, if they understand what the guideline annual means, what the guideline single premium means, and more importantly, they understand your goals. So let's break it down. Life insurance retirement plans versus traditional retirement plans like IRAs, 401ks, and even a Roth IRA. Let's take a look at this. So if you look at this chart, life insurance retirement plan versus 401ks and IRAs. So does it have tax-deferred growth? Yes, on both categories. Tax advantage withdrawals? Yes. on the life insurance retirement plan, but no, unless, of course, it's a Roth. Contribution limits, there's no IRS limits, depends on policy design. However, and on the 401k IRA, yes, there is a contribution limit, $23,000 for a 401k in 2025. This is a big reason why I don't have a 401k plan or even a IRA or Roth IRA. Why? Because early in my career, I learned how to make more than $100,000, $200,000 a year in income. And I want to contribute to my savings more than just the $23,000, $24,000. So that's why today I don't have a traditional IRA, 401k, or Roth IRA plan. I've always funded and overfunded my life insurance retirement plan. And maybe you've seen some of my videos. This is why I invest in businesses. This is why I invest in real estate. This is why I invest in purchasing my cars through a life insurance retirement plan. Maybe somebody can check out some of these videos right here. Let's get back to the chart. Is there any required withdrawals? No, with inside the life insurance retirement plan. But yes, with inside the 401k and IRAs, RMD stands for required minimum distribution starting at 73. Early withdrawals? No, with a life insurance retirement plan. But yes, there are with a 401k and IRA. You have to pay a 10% early withdrawal penalty if you take this money out before 59 and a half years old. And guess what you also have to pay? Federal and state income tax. So it might total up to 30, 40%. Death benefit inside a life insurance retirement plan? Yes. Any death benefit inside a 401k or an IRA? No. Is there any market risk, stock market risk with a life insurance retirement plan? It's often insulated, especially with inside an index universal life, because you can only get the upside of the stock market, but none of the downside risk. And guess what? Your money is not directly in the stock market. That's why this is not called a investment. This life insurance retirement plan, one more time, it's a supplement to one's retirement plan, and it's not an investment. It is a life insurance retirement plan, not an investment. A 401k and IRA, yes, they're subject to market volatility. So fam, here's what it means. A life insurance retirement plan gives you liquidity, safety, and control while still building wealth. The traditional retirement plans, well, they're good, but they come with restrictions, risks, and Uncle Sam and cousin California or cousin Illinois, if you live in an income tax type of state, cousin New York, they can't wait for you to withdraw money from these traditional IRAs and 401k plans, because not only do we pay Uncle Sam, but you're paying that state as well. Well, Matt, can we do the same comparison with our Roth IRA? Let's go. So tax-deferred growth, yes, on both sides. Tax advantage withdrawals, yes, again, via loans with a life insurance retirement plan, and yes, with qualified withdrawals from a Roth IRA. What about contribution limits? No, with the IRS limit based on policy design and income with a life insurance retirement plan. There's none, but there are with a Roth IRA. So the maximum you can put inside a Roth IRA is $7,000 per year if you're under 50 and $8,000 if you're over 50 years old. What about if I'm making more money, Matt? What happens? I'm successful in my business. I got things going on. I got a nice bonus check. Can I put money inside a life insurance retirement plan? Matt, are there any personal income restrictions to contribute to a life insurance retirement plan? No. With a Roth IRA, yes. If you are single, it starts phasing out the tax-free component of Roth IRA starting at $146,000 and $230,000 for couples starting in 2025. Is there any early withdrawal penalties to a life insurance retirement plan? No, there's none with a life insurance retirement plan. As long as you have cash surrender value inside the policy, you can always withdraw the contributions you made in the past, your premium deposits in the past, or you can loan against the policy, and there's no withdrawal penalty to those loans. But in a Roth IRA, yes, again, 10% on earnings if you're under 59 and a half years old. Again, restrictions come again, just like it had with the traditional IRA and 401k, as it does now here with the Roth IRA. Is there any required minimum distributions on a life insurance retirement plan and Roth IRA? None on both. Is there a death benefit with a life insurance retirement plan? Of course there is. And it's also income tax-free according to Section 101A to your beneficiaries. What about in a Roth IRA? Absolutely no death benefit to a Roth IRA. Whatever's inside that balance, that's what your family receives. Just the account value left over, transferred to the beneficiary. No more. Market risk. Is there any market risk with a life insurance retirement plan? Using an index universal life policy, again, it has stock market-like gains up to a certain cap, but no downside risk in case the economy, stock market were to lose. What about inside a Roth IRA? Well, depending on your asset allocation or an investment you use inside a Roth IRA, yes, it could be exposed to markets, ups and downs. What about a life insurance retirement plan? Access to funds before retirement? Yes, via policy loans at any time. What about inside a Roth IRA? It's limited. Only contributions can be accessed early without penalty. Matt, is there any built-in living benefits to a life insurance retirement plan? Yes, some policies offer chronic and critical illness riders, just like I had mentioned to you previously. For example, if you get T-boned in a car accident and you need 6 months of recovery and you have a certain disability, or you just can't get around, you can access a portion of this death benefit, not the cash value, while you're alive. For example, in my book, Gotcha, the builder of my website, moneysmartguy.com, and I'll put his video right up for you to watch it. The guy that built my website by the name of Dustin Frampton suffered a stroke at 38 years old. He's putting $70, $80 a month into his policy. And make a long story short, he got a nice sizable tax-free living benefit from his life insurance policy death benefit while he's alive. And he was free to use that cash however he wanted to use it. Now, mind you, he picked the best stroke rehab center in America, and that was at Northwestern Hospital. You remember when Jamie Foxx had a stroke a year ago? Well, the same place that Jamie Foxx recovered to his physical therapy for his stroke is the same place that Dustin got his stroke rehabilitation. Why? Because he had the cash to do it from his, not his savings, not from his cash of his insurance policy, of his life insurance retirement plan, but from the death benefit of that life insurance retirement plan because it had living benefits. What about Roth IRAs? Do Roth IRAs have any living benefits? Absolutely none. So here's what I'm saying. The Roth IRA is a solid retirement planning tool, no doubt. But it comes with limits, it comes with restrictions and income ceilings that holds a lot of us back. On the other hand, a life insurance retirement plan gives you more flexibility, no income cap, tax advantage access, and a built-in life insurance protection plan all in one. That's not just retirement, that's a movement towards legacy, security, and freedom. So you're saying, hey, Matt, why does this matter? The reason why we built this company of 5,000 agents across the country is because we have a movement helping people understand the awareness, so therefore they can be educated and to move forward some form of action to getting this done. Imagine this though. What if instead of relying solely on a 401k that's taxed and tied up, you had a life insurance retirement plan with $300,000 in cash value at your retirement age that you can tap into income tax-free for income and leave a $500,000 death benefit to your children? That's how we break cycles. This is how we build our Black and brown communities, multicultural communities. This is how we rise from survival now into strategy and legacy. It's time to stop playing defense and start building offense with our money. Because financial freedom isn't about what you make. It's about what you keep and how much you multiply it for the next generation. So here's what I want you to do. Number one, you have to get educated. This may or may not be a plan for you. It's not suitable and appropriate for everybody. See if it's suitable and appropriate for you. Who knows? Maybe a Roth IRA is more suitable for you. Who knows? Maybe a traditional IRA or 401k may be suitable for you. I'm just talking about one component in the whole space of the financial services industry, which happens to be a favorite one of mine, but it's not the only one out there available. See, oftentimes people say, this is the only thing you do, only thing. No. Depends on your situation. And I don't know, but you just simply watching this video if the life insurance retirement plan is appropriate for you. Number two, you need to talk to a licensed life insurance professional that understands how to do this right. Even some of the best financial advisors out there are even unaware because they lack the license in the insurance industry, even though they have the title of financial advisor, which I've come to discover. By the way, I used to be Series 6, Series 63, Series 26 license 1.2 as well. And I realized that a financial advisor is nothing more than somebody selling stocks, bonds, mutual funds, and variable products, annuities, and life insurance policies. They're not really financially advising. They're just selling you a product. So you have to talk to a licensed agent that understands the product of a life insurance policy, a life insurance retirement plan, to see if it's appropriate for you. And they know how to structure it to see, again, if it's appropriate for you. And last but not least, don't wait. Your time and your health is your greatest asset. If you watch this video too late and you're not healthy or you're too old, you may not qualify for a life insurance retirement plan because there is a health review because this is an insurance company underwriting this for you. So who knows? You may or may not, or you may be qualified, but the cost, fees, and expense of an insurance policy because of your current health might make the internal cost of this life insurance retirement plan too expensive for you to take advantage of. That's what a life insurance agent that's properly trained in understanding these life insurance retirement plans will guide you into doing. Finding not only if this is appropriate for you, but finding other alternatives in case it's not. That being said, please put your biggest takeaway in the comment section below. If this makes sense, please share it with somebody that you know that's searching for alternatives to understanding how money works. And if you haven't done so yet, make sure you subscribe to the 7 Figure Squad YouTube channel. From Dallas, Texas, I'm your Money Smart Guy. And until we meet again, continue to live smart, continue to love smart, and be money smart today.